How much should a retiree, particularly a new retiree, have in checking and savings? How much do they keep cash on hand as well? I get this question a lot, particularly from people who are newly retired. They say, well, I keep money in my savings account at the bank. How much should I keep there? Or should I invest it? Should I add to the savings? And with current savings rates, the interest rates are so high, more and more people are thinking, well, that's not a bad thing to have a bunch of money in my savings checking, and it's not hurting me, is it? Let's talk about that with my co-host, Tony Shore. There he is. Tony, welcome to the show. How are you doing?
Where the heck did you get that kind of money?
From our retirement account.
That was supposed to be our reward for all the years of responsibility.
you know, it is, in this particular case, a unique question for retirees versus, say, you and I who are working.
Right.
Because right now, you've probably heard the rule of thumb. You need 3 to 6 months of income in your savings, emergency fund. We'll call it the emergency fund.
Right.
But I don't think retirees need to have that. I don't think that applies.
Really?
Yeah.
Really?
Yeah. Doesn't make sense to me.
Huh. Interesting. Yeah, I've heard, Dan, people with big amounts of money in the bank. And I guess one thing is Sarah and I have never quite been able to save the big amounts in our checking or savings that we, our goal, we never quite get there because things happen, life happens. But then I hear, and we try to put as much as possible into our retirement accounts, like 401ks and our IRAs, or our kids' 529s. But then I hear about these people where like, yeah, we've got 50,000 in our bank account, and I'm like, wow, that's a lot, or 100,000 or 250,000 in a bank. And I'm like, that seems counterproductive. And they're like, why? And I'm like, well, because it can't be earning any money sitting in the bank, you know?
But then they say, hey, I can get 4 or 5%. We're getting close to 6% on some fixed rates here.
Yeah. Well, if they have it in a CD,
right.
But otherwise, if it's in the bank, I'm not talking about CDs. I'm talking about in a checking or savings account.
Yeah, and that's what I want to talk about. Like,
you can't make. There aren't checking and savings accounts paying big enough percentages to overcome what you could get by putting it elsewhere, even in a MYGA, like a multi-year guaranteed annuity or something like that, right? Am I right?
Well, so right. You're what you're thinking is, which is very common, is all right, what can I get on my savings?
Right.
That used to be, there used to be a difference between checking and savings.
Right.
But like 3 years ago, even 2 years ago, there was no difference. You make 0.05 or 0.01 compared to checking and savings.
Right.
But today, you can get high yield savings accounts that are paying over 4 or 5% a year. And it's like, oh, that's not bad. So but it begs the question, what do you need? What do you need an emergency fund for in retirement? Well, for emergencies, of course, but what is an emergency? What is an emergency for a retiree? Like, yeah. I was thinking about this. Like, when people ask me, and it's a very common question, how much should I keep at the savings? How much should I keep at the bank? And a lot of people come to me and say, I have this much at the bank. I'm going to keep it. I'm never going to let it go below. And it's usually around $30,000. Just throwing that out there. For whatever reason, that's the number that seems to people. And it's like, I don't want that 30,000. I don't want my checking savings account to go below that. Why not? I just don't want that. Why not? So it's an emotional comfort,
a security blanket.
Right. So then we say, okay, that's my emergency fund. Okay. Mm-hmm. So then I ask, well, what is an emergency? And do you need it now that you're retired? See, an emergency fund for someone that's working is 3 to 6 months, say 6 months of their income. Okay. I make $5,000 a month. So I need $30,000 of income in case I lose my job. But you're not going to lose your job in retirement, right? Social Security is not going to stop.
Right.
Your pension's not going to stop, and you're not going to get fired from Tony. You might get fired from retirement,
right?
Your wife might be like, get out of here. Go back.
Yeah, that's true.
So I was thinking about what are some emergencies, and I came up with a few here, and then I'm thinking, well, maybe not. These aren't really true emergency, but here's a typical one: a health insurance deductible. So let's say someone retires and they're on Medicare. Typical retirement, it's probably on Medicare.
Sure.
And they're on a Medicare Advantage plan. They might have a deductible on some surgery or something. Maybe the max out of pocket's $5,000, something like that. You could get that down to less than 2,000 in Florida. So that could be it. Maybe an early retiree, someone that's retired at say 60, 62 or something like that, which is not early anymore. Apparently, more and more people watch the show we just did on people thinking they're going to retire a lot earlier than 65. That's they might have an insurance deductible, but you know what that is, so you can put money aside for that. But okay, is it going to be 30,000? No. Your automobile breaks down, you have an auto repair, that could be it.
Yeah.
I put dental work up there because that's a biggie for retirees.
If they have to pay out of their own pocket, if they don't, they still have to pay probably something if they have major dental work, which a lot of retirees need.
Right. And so
hearing
that could be
aids.
$6,000. That could easily be $6,000 or $7,000.
Hearing aids if they don't have.
Yep. Some of the HMO or the MAPDs, Medicare Advantage plans, do cover hearing aids or vision or dental, but a lot of them don't, and then there's limits. So
they don't cover everything. Like there's a limit to what they cover. They're not covering 100% of everything.
Yeah. A home repair, plumbing, something goes wrong.
Yeah.
And that's very common. So it's
okay.
Home
repairs are common. Like the refrigerator breaks down and you need a new refrigerator, and that's expensive.
Right, but we're not talking 30,000 expensive.
No.
Right. So why is this number so high? Now, hurricane in Florida is an issue.
Sure.
But I saw that Hurricane Beryl that was hit Texas, went all the way up to upstate New York and caused some damage. So so it's not just Florida, but okay, if I have a hurricane and my deductible is 5% of the house, all right. So you could, but you're going to need money on hand to get a hotel or whatever.
Yeah.
I mean, so I don't know. I put taxes on there too, because here, like, if you need,
that's true.
If you're going to have a dental expense, say you get a dental bill for $8,000, which, I mean, just to think about that sounds crazy, but it happens. So you get an $8,000 dental bill, and you're like, I got to go to my IRA to get this because I don't have $8,000. Now all of a sudden you got to pay taxes on it, so you need to pay the taxes as well. So you can't forget about that. But I think I think that these are overblown. I think people have too much in their checking savings. Does that sound crazy as a financial planner? Retirement focus?
It sounds a little crazy, but what you're saying makes sense.
And I think the reason why I say this is because people often lose sight of the whole point of an emergency fund. The goal of keeping money in your checking and savings is not to grow your wealth.
Right.
Which 2023, 2024, interest rates went crazy up. And more and more people are looking at this and saying, oh, I like this. Why don't I put more in there? Why don't I take my entire account and buy? And we've done shows on fixed rates and how great they are. You mentioned the MIGA, multi-year guarantee annuity, CD rates. Like, why not put all my money in a CD right now and lock in 5%? Like, what's wrong with that? We did a show on that. But I don't see that as the purpose of keeping money in your checking and savings.
Right.
To grow wealth. I mean,
it's not growth. I mean, even the highest rates you could get with high yield savings still isn't the growth you could get elsewhere, probably. So it can't be about growth.
But compared to 2 years ago, just 2 years ago.
Oh, well,
now you feel like you've won the lotto with these interest rates.
Yeah, but I mean, I don't know how long you can lock in that return on a high yield savings account, or if they can change it anytime, because, now
Right.
we see the writing on the wall now for lower interest rates.
Right.
And the Fed says in September, we're probably going to lower rates. That's what he said, because the inflation numbers went down to 3, and even we're at an even 3.
Right. So these high yield savings are maybe going to go away again, but uh, you can't just you can't lose sight of the fact that you're not putting money in this checking saving as a growth vehicle,
Right. It's for
even though it
emergency.
happened to be
Yeah.
that way right now, relatively speaking. But is it keeping up with inflation? Barely. So
Yeah.
I think the real reason why you want to have an emergency savings is either if you have 100,000 sitting in your checking account, it's because you're waiting on something. You're either going to buy a house or property investment. So you're waiting, right? And that's okay.
Right. Or a big vehicle. Like a lot of people are like, 30,000 isn't even enough. I need more in my savings because I want to write a check for cash for that trip to Europe or for that car. And those are two things you didn't mention: travel and buying a new vehicle. Well, maybe you did mention vehicles, but auto
Vehicle
repair,
repair.
you mentioned repair.
You-
That's an
right.
emergency. So this is an emergency fund. You need liquid money for those things, right, Dan? And as a financial planner, you know this because you say, what are your goals? Like, how much am I going to need? And you're trying to figure out, okay, in the stock market, and that's the problem with brokers who just put your money in investments. What if you need 50,000 next year to take the grandkids on a trip around the world, or to Europe, or to Disney?
Right.
You're not going to want to pull 50 grand all at once, or 30 grand for a vehicle out of you can't pull it
Stock
out of it.
portfolio. Right.
Yeah. Your portfolio. Yeah.
You could, right? And a lot of people do,
Yeah.
but you're playing a game there. You're playing a game, which is you better hope that it's up, because if it's down, that's like, man, I pulled it at the wrong time. So that's really, it's the purpose of a emergency fund in retirement is to prevent you from having to draw down an asset that's underperforming and selling at the bottom, because that's where you really get hurt.
Right.
So you brought up a very good point, though, which is, well, what if I plan on buying an RV and I need 80,000 cash to buy a used RV or something like that? Well, that's different. That's not an emergency fund. And so you got to separate that. That's a cash flow need. And that's not an emergency cash flow need. Oh my God, I got an emergency. I got to buy a vacation, right? This is something you're thinking about in advance.
A trip to Disney World with the grandkids isn't an emergency.
Right.
Yeah.
Right. An emergency, I need a new car. Is that an emergency? Well, if you wrecked your other car, it would be an emergency, but then you have insurance for that, hopefully. So that's another issue. Make sure you have comprehensive insurance, which is ridiculously priced in Florida and a lot of places.
So there's another reason you might need more money in your bank account, is to pay those insurance premiums.
Yeah, right. So cash flow is what the checking account should be used for. Do I have enough cash flow? This is different than, hey, in the next 1 year, I'm going to need 50,000 of cash just to live. In year 2 and 3, I need another 50. Laddering those, you're not going to put those in your checking savings. You could right now with interest rates high, but you might do something different. And so when people say, how much do I need in my checking savings? How much cash, literal cash, do I need on hand? They shouldn't have a lot in there, because they might be confusing that for their cash flow in the years 1, 2, 3. That's a very different strategy, bucket strategy.
Plus they're risking opportunity loss there with making more money on
opportunity cost is right. Can I invest that differently? 10 years out, you're going to want to be in the market. Even I would say a lot of times 5 years out, I'm going to be in the market. 3 years, 4 years, 2 years, you're not going to be in the stock market for that money, but that's not going to be sitting in your checking account. Well, it might be high yield savings is great, but you nailed it, Tony. Who knows when those rates are going to go down in the money market and the high yield savings? They can go down tomorrow. They change every day.
Yeah.
So there is no right answer here, but I think one of the big problems is people keep too much on cash and they're missing out. They're missing out on growth, but bigger question is they're missing out potentially on just total financial planning. income planning. You want to have your money working for you.
Mm-hmm.
And what's wrong, and I know this is going to be counterintuitive and people might vilify me for this, but what's wrong with throwing down a credit card in an emergency to buy you 30 days while you go to your, high yield or your liquid money somewhere to get for an emergency? Like, do you really need to pay it immediately, right? True emergency. No, typically you can. And now they just changed the rates on selling stocks to 1 day, the turnaround time. So you can get money in a pinch, but the goal isn't to just put it in the savings account to make extra cash. No, the goal is to prevent you from having to sell at inopportune times. That's the key. Now, what's the magic number? 30,000. I threw it out there. But it's whatever you feel comfortable keeping readily available so you don't mess up the rest of the plan. Right? So if someone comes to me and says, Dan, I love your plan, but you have me with only 20,000 in the bank. I want 50,000 in the bank. What that tells me is, well, fine, this is good because it's a back and forth. I'm not dictating to them what to do with their money. I'm guiding them. And they say, that seems too low to me. They're telling me I don't feel comfortable with it. And so what am I going to do? I'm not going to be, well, too bad. This is the plan. Take it or leave it. We're taking that out of the 30,000 and investing it so I can make a fee on it. Right. That's, or so I, so I feel good about it.
Mm-hmm.
No, we talk about it. And odds are what will happen is we'll come to some sort of compromise and we'll take more out of the investments and put it into the checking savings for them because they're happier.
Yeah.
They're happier. And I think also what helps people, I say this a lot, and I think I've done a show on it. People have trouble spending their money. A lot of people do. But I think throwing money into their checking account gets them to spend it more. If we're throwing money into their checking account and they're just letting it sit there and grow, well, that's a problem. It's not a problem, but it's not what, if they truly want to spend the money, throwing into the checking usually gets people motivated because they don't feel like they feel like it's burning a hole in their pocket. It's not good. Those people though that are saying, oh, I can get 5%. Why don't I just keep that there? This is where you get a little complacent. So that's why there's no right answer. I want people to be comfortable, but the reason I want them to be comfortable is so that they stick to the plan, not because they're emotionally attached to seeing 6 figures in their checking account. That's not a real good reason. If it's though, hey, if I know you said I only need 15,000 in my checking savings, but if I have 25, it'll make me feel so much more comfortable. I'm not going to argue with that. I'm not going to fight someone on that.
Yeah. Makes sense.
Like for you, Tony, you said you don't keep a lot in checking savings. You never have. So you're not one of these people when you and Sarah retire are going to be like, I need to have 50,000 in my checking. No, you'd be like, oh, yeah, I'm fine with that. I manage my cash flow in other ways, right? But when you retire, things change. So just remember that emergency funds, they're not hugely important in retirement because what's the emergency? The emergencies, most of them can be planned for, and you're not at risk of losing your income. Now, you don't want to be relying 100% on your income from a risky asset. So you want some steady income like Social Security. But yeah, you should have enough that you feel comfortable enough to stick to your plan. And people that don't have a plan, how can they know what to put in? So odds are, first thing you want to do is create a plan, and then that will help you answer the question of how much money to keep.
Right.
As for cash, which if I'm looking correctly, Tony, if I look over your shoulder, I could see you probably have a couple of $1,000s worth of valuable records in there. So, but the turnaround time for getting rid of that inventory is pretty high. So people keep cash in books or at home, hidden.
Yeah.
You don't want to go too crazy with that because what if someone steals it or the fire or something? So you don't want to have too much literal cash on hand.
Yeah.
But it's nice to have,
Yeah.
a couple $500 in cash ready to go.
Yeah. Yeah. I've got way more records than that though, but
I know.
That's the problem.
Imagine, Tony, if instead of those records you had $5 in each one of those spots, it'd probably be worth more, but not to you, Tony, not to the audiophile.
Right.
Music to your ears. All right. So what's the magic number for you, Tony? It's different for me, but I think retirees, I have a little too much in their savings checking. It's not hurting them now, but once interest rates go back down to zero, maybe,
Right.
I think people will start to say, yeah, maybe I do have a little too much. Don't get comfortable sitting on cash because you're missing out on potential opportunities. I'd rather you spend that money and live and enjoy the moment than just hoard cash. You're only helping the banks.
Yeah. Good point.
All right. Thanks for another good show, Tony.
Yeah, great show, Dan. Some good points in there. I hope people think it'll make people think about what they have and where it's allocated. And I bet if they have questions, they can call you and get a hold of you and set up a consultation, correct?
Absolutely. I'll help them come up with their magic cash number, how much you should keep at the bank. Easiest way, call me, 888-508-5935. Go to dolphinfinancialgroup.com and click the online button, request an appointment, and someone will call you back.
All right.
All right, Tony. Have a good week. We'll catch you, everyone, in a week.
All matters discussed in today's show are for informational purposes only.
This show is not investment advice.
Dan Wendol nor Dolphin Financial Group are affiliated or endorsed by any government agency.
Investment advisory services are offered through Dolphin Wealth Management, Inc., a registered investment advisor in the state of Florida.
Insurance products and services are offered through Dolphin Insurance, Inc.
Dolphin Wealth Management, Inc. and Dolphin Insurance, Inc. are affiliated companies doing businesses as Dolphin Financial Group.
You should talk to someone at Dolphin Financial Group before implementing any of these strategies or ideas.